A total portfolio approach is a shift in how organizations look at the more complex growth of a multi asset portfolio. If we look at large institutional organizations in the past, they would have a max usually of 5% of private assets in their books. Some of them had none. Now, when you look across this subset of organizations, they can have 30% or more. So when you sit down and you have to help guide their investment management committees to think through unifying and understanding public and private assets into a single portfolio, takes time, effort, and you need to have alignment. You're not just looking at a benchmark or a mandate anymore, or looking at an allocation to a single asset class. You have to combine unique illiquid data from private assets and sync that with meaningful metrics and risk models that also bring forward public markets. What's really key here is that you need to understand how to look at measuring those metrics. You have to understand also how that's going to change the dynamic of going from that benchmarking into more of a global macro view, which provides organizations a faster ability to adapt to market changes. You need to be able to pivot. If you just think about the last 3 to 4 years that we've had in our markets, organizations have to drive that change. I think the other really important piece of a total portfolio approach is better marrying their client business with how they are managing those funds. You need to ensure that you're not overselling your capital or raising an inaccurate amount of capital. And that allows you to provide a better, more strategic view to your client pool base that is buying into some of these funds. When we think about the transition to a whole fund view or that total portfolio view, depending on how certain clients might phrase that across their internal teams, it comes down to 3 key shifts. It's a shifting of mindset on how your front office investment teams are looking at risk, how they are considering raising portfolio construction and scenario analysis, and then how those are executed in a very timely fashion across the market. That's the first piece. The second piece is the grappling with legacy technology. Technologies are wonderful tools that allow us to be more effective and productive, but older technologies often have a fit for purpose that is unique to public asset classes. Now, what we see is an evolution in the vendor space that allows folks to begin to expand and unify both public and private assets onto a common platform. We see this as your investment book of records, or IBOR. Folks usually take 2 key paths here. It's usually an enterprise level solution in the market. Now, there are certain organizations, depending on how complex their asset class and multi-asset funds are, that might look at a hybrid model to help supplement as technology grows into this space. The other piece here is data. Data is at the heart of everything that organizations do. Bringing in the right data is critical, and the ability to cleanse data. When you think about data, you have to transform and bring 2 different languages together across public and private assets. So folks need to be able to push that data into technology platforms that can unify that view to an enterprise level multi-asset portfolio. So those are going to be like the really key critical pieces that organizations have to approach as they go on their journey of their whole fund view. When you think about insourcing and outsourcing across organizations today, they usually ask a couple key themes about their business model. How is their business model today from an operating perspective? But more importantly, what are they going to be in their next phase of growing up in 5 to 10 years. And that often looks at where are they positioned in the market globally, what types of asset classes and strategies are they managing, what is the talent profile in these regions where they're operating, and where do they feel that they need to put the right cost to dollars? Is that putting cost into their front office teams that are driving some of the critical revenue that's coming into the business? And do they look for the right partner then potentially to balance either a full lift out of maybe their middle office capabilities, or do they go to more of a smart sourcing where they lean towards a particular area of their business? Maybe that's derivatives and moving collateral. Maybe it's thinking through managing some of their data components. When you think about outsourcing or insourcing, it's about the strategy of where an organization feels their secret sauce has to be maintained to strive within their business, compete against their peer group, and grow to hit their personal revenues and targets. But then when they need the right partner, picking the right place to play those spots. Now, firms that are doing that outsourcing, it's really important to them that two things. They're putting the right managerial oversight and SLA so that their business has continuity and there aren't barriers where they are creating some timing variances. And then the other really important piece too is from an infrastructure perspective. When you are working with an outsourcing partner, it's really key that when you bring that data in and share and push that data out to your partner, it is clean, it is cleansed, and that you can very simply push that into other workflows and downstream processes.